Joining us right now, and I will butcher this. Ulrike, I got that part right. Hoffman. Now I'm gonna mess up the rest of it.
Burchardi.
I can't do it. UBS's CIO for global equities. Good morning to you. We've been all trying to understand what to make of this, and what to make of this market right now, given this sort of the shocking amount of what seems like volatility in the geopolitical space, but not actually volatility in the market.
Mm-hmm. Yeah, so for the markets, geopolitics has short legs but long shadows. So on average, the equity markets rebound 4 weeks from the onset of conflict. But they do have lasting structural impacts on the economy. And we saw that in '73, for example.
Right.
Much more investments into energy independence, strategic oil reserves. Also refocus on fuel efficiency and renewables. And I think we'll see the same this time around. So
what do you mean by that? So when you say we're going to see the same, what is that? What's the rotation then?
Energy infrastructure and power. And I think we've seen this in the market. What we've seen so far is that energy and also semiconductors have lifted the market so far this year.
So semiconductors, though, is not a function of war or geopolitical issues. That's a function of AI.
I would say that AI is even the dividing line for geopolitics. And so not just for the markets, but also if you want to be on the right side of the economy and on geopolitics, you better be also the leader in AI. So I think it transcends a lot of different dimensions.
Does the euphoria in the market around all of these IPOs make sense to you?
So I think right now, for me, actually a more interesting question than maybe the flow question that you're alluding to is really how disruptive AI is to incumbents.
Okay.
When we look back at paradigm shifts in the past, we have seen leadership in the market changing. If you think about the mainframe era, for example, IBM was the defining company of the mainframe era. Then it passed the baton to Intel and Microsoft. And then, of course, Apple took the lead with mobile computing, the first $1 trillion company.
Right.
And I think the question now is how disruptive AI is to those market leaders.
Okay, and what did you think about that, though?
Yeah, so we've seen what happened in software. But I think AI coding is so disruptive to software, and I think agentic AI could very similarly be as disruptive to the internet. Because if more and more agents are executing on our behalf, the power balance can shift away from internet to those agentic platforms.
Have you changed internally at the firm itself, how you're operating, how many people you're hiring, who's on your team, everything else as a result of AI yet?
We have. Actually, one of the things that I think that is so underappreciated by the market is how little the traditional factor buckets of country, sector, style, and size capture in terms of investment returns in the equity markets. So we actually formed a team that is focused on AI 2 years ago. It's a global team. It's not a sector team to understand the investment opportunity and then to come up with portfolios and publish on those portfolios to capture the investment opportunities that we are seeing for the next decade. AI, electrification, power and resources is how we called it, and longevity. And that's a very different structure to what most investment firms embrace.
No. What I'm asking is slightly different. I'm saying the people, the physical number of people that you're using today on your team, is it more or less than it was 2 or 3 years ago?
It's the same, but we are leveraging AI to be even more productive.
Okay, and do you believe that there's a genuine ROI on that? That's the fundamental question right now that I think so many CEOs are looking at, because they're looking at a massive spend, huge CapEx spend, and they're not necessarily arguing that they're seeing the revenue coming in on the other side yet.
I think the ROI is clear. We see it in coding. We've also seen in math. I mean, 2 weeks ago, we solved an unsolved math problem that was unsolved by humans, for 80 years. So the question is, how do you operationalize it? And I think there's probably more to go. But the ROI in any type of knowledge work is very clear.
And then why do we hear even from big tech companies that they're thinking, well, we should just use more humans to do some of this work right now? I mean, we've heard that now repeatedly over the past 3 weeks.
I think one of the things is the CapEx, right? If you're in the public markets, you have to focus on margins. And so there will be an offset between CapEx and labor, especially for the technology companies. And I think we'll see more of that this year. We'll see it probably every week now, but I think that's going to continue. But other firms who don't quite have the same amount of capex are probably not forced to make the same decisions at this stage.